Oil tumbles after the US and Iran agree to talks. The price of oil fell more than $1 a barrel on Thursday morning after the US and Iran agreed to hold talks in Oman on Friday, easing fears of a potential conflict that could disrupt oil supplies in the Gulf. Exchange data shows oil traders rushed to lock in prices at higher levels in January as the return of Venezuelan crude to the market leads them to expect more oversupply. Muyu Xu is an oil analyst at Kpler. Muyu, the impact of geopolitics has been fairly muted lately, hasn't it, despite all this concern about Iran? Is that because traders are expecting the market to be flooded?
Well, yes and no. Well, the market fundamentals still tilting toward a massive oversupply, but certainly geopolitical factor plays a role here. And actually, the prices remain in high volatile because like what happens between Iran and the US stays in flux. And that said, we still think Iran is very unlikely to publicly meet the US demand beyond the nuclear issues. So a real breakthrough in the negotiations still look very distant. And as a result, we do think the geopolitical risk will continue to drive oil prices in the near term and likely putting a floor around $65 per barrel through February or even into March.
What about the return of Venezuelan oil to global markets? Which competitors are losing out there?
Right. It has been a month since the U.S. controlled the Venezuelan oil sales, and we have already seen a clear reshuffling of the trade flows. Our data shows like in January, there were about 520 kbd of Venezuelan crude being shipped, and more than half actually went to the U.S., while around 17 to 20% was stored in the Caribbean island. And that's a sharp contrast to the situation before the capture of President Maduro, when the bulk of Venezuelan crude was heading to China through the OPEC or so-called dark trades. And of course, the return of the Venezuelan oil to the commercial market have waned heavily on the heavy crude differentials. We saw the Colombian and Canadian crude prices fell. And of course, it will take time for the refiners to fully adjust their crude slates, and ultimately the price will determine what crude would be displaced. But having said that, we do expect the U.S. refiner to absorb around 500 to 600 kbd of Venezuelan crude, and then Europe probably take 1 or 2 cargoes per month, and then some cargoes might left for India, and that could drive those crudes used to be shipped to the, let's say, the U.S. GC refiners and redirected them to Asia.
Also this week, India reached a key trade agreement with the US. It has been a key buyer of sanctioned oil from Russia, and President Trump says it's now agreed to stop. But is that likely to happen?
Right. I think it's still murky because right now we only heard from Trump claiming that India has agreed to stop buying Russian oil. But the New Delhi side so far have kept pretty quiet, and there's no public confirmations or clear guidance to the refiners. And that said, we do expect that India might slow buying, but we do not expect the country where refiners there to completely move away from Russian crude, because the sanctioned Nayara Energy relies solely on the Russian feedstock to keep operating, and the steep discount on the Russian oil continue to offer attractive margins for the Indian refiners. So at the same time, the long-standing relationship between New Delhi and Moscow also suggests the trade is likely to continue. And our data does show that India's import of Russian crude fell to just 1.1 million barrels per day in January. That's the lowest level since November 2022, while Reliance has resumed the buying for February and March arrival cargoes after a brief pause. The overall Russian inflows into India are likely to stay at 1.1 to 1.2 million barrels per day in the recent 2 months. So how quickly India refiners can cut back will really depends on how strong the political pressure from Washington becomes and any reduction is likely to be slow and gradual. So whether the shift can be sustained will ultimately depend on how India balance the political consideration with the economic realities.
We are seeing more global pressure on Russia's sanctioned exports, aren't we? The EU cracking down on more tankers. Are they working? Are sanctions reducing Russia's exports more successfully than they were?
I don't think so. Our data still shows the export from Russia is pretty robust, but the sanctions certainly scare away some buyers, for instance, the China's SOEs and also the some Indian refiners. So that has led to a significant buildup of Russian cargoes on water, which we call it floating storage. And so we have seen a lot of the tankers, they are waiting outside of West Indian water, waiting for the buyers, and also some just carry on going to China, trying to find their luck.
That was Muyu Xu of Kpler. Don't forget, you can watch more videos on Reuters.com.